Buenos dias. How are you all doing? All good? How many have we got? A few. Okay. Right. Let's have a look at what's going on this afternoon, or this morning rather. I've just been scalping this morning, really. Not a lot, to be honest. But I was trying to play that gap fill on the DAX, and it's not really playing ball. None of them are. They were all looking like they wanted to, but changed their minds. So, not quite sure where we're going this afternoon. We'll have a look at those in a minute. Afternoon, Rahat, Andy. Still flat. Have absolutely no idea on market bias. Nope, neither have I. I can't even determine the market bias on the 5-minute chart, let alone on anything else at the minute. It's just all over the place at the minute. Hi, Diamond. Adrian. Very difficult conditions at the moment. It's very, very, very choppy. Really, really difficult to even scalp this because you got all these big wicks and you get these big strong moves. You enter short and it pulls back, takes it out. Then it drops down, looks like it's going short. Then it sits there and wicks you out for a bit. Then it pops up and then it breaks a high and you think it's going to break out and it pulls back. It's just a mess, up to mess at the minute. It is looking like it wants to go there to the gap fill. But very, very, very hard work getting there at the moment. I've been chopped around all morning. I've got $300 odd in the bank and I can't really get any more out. Every time I make a trade that works, I get a trade that doesn't. It's very, very hard. So not quite sure what to do this afternoon. I'm going to watch it at the open and see what happens and see if I can find some options to get in. Nyasha, hi. Been scalping all morning as well. Nasdaq has been rewarding. Afternoon, Mark. So there's a few bits of movement gone on, but nothing. This is just not gone anywhere. The DAX. We stepped up into that and got a 3-bar rejection out of it and down again. Now we're sort of sitting where we are. No real directional movement whatsoever in London. Oh, excuse me. I'll be staring at charts all morning. It's very tiring, you know. It's very hard to see what it wants to do at the moment. So thinking maybe long at the open, but really, really, really unsure. So we'll see what happens. We've got PMI at 245 this afternoon. So just after market open, we got the PMI figures released. That might well be what we will wait for to give it a bit of a kick in one direction or the other, but very, very difficult to tell. As I say at the moment, which way we're going. The US dollar is again doing the same thing. Obviously, the US dollar is doing the inverse to the indices. It's trying to get down and do its gap fill as well, and having the same sort of problem. London, it looked like it was really going for it, and it's just had a big pullback, starting to look like it wants to push now, but we'll see. Morning, David. Weakness in the US dollar give us opportunities to get in when extended. Yeah, it's just difficult to know which way this thing's going to go at the minute. I'm long bias on the US dollar still. I don't think that's going to change in the interim, but how it's getting there is anybody's guess really. So we'll see what happens with it. But at the moment, I think the bias has got to be to try and get the gap fill done and see if that happens and then go. So we will see. But very, very hard morning this morning. I've got a feeling I'm going to be a break-even day today by the looks of things. What's going on at the moment? What have I got at the moment? I've got short on the S&P at the minute. With my stop about there. I've been targeting the long, so I've made a decent amount of money on that move, lost a bit on that, went short, made a bit there, pulled back, did that, got in short again. Now I'm in drawdown. So I mean, it's so undirectional at the moment. It's very hard to read the market structure on it because it's just put a new low in after doing that. So market structure to me at the moment is bearish. But I'm not quite sure where we're going to go on the way up if we're going to go back. But then the other side of me is saying, actually, no, we're going up for that gap fill. So I'm bullish and bearish. I can't work it out. When you can't work it out, it's best to sit out. It really is. You just get chopped to pieces. You'll end up giving it all back, which is what I'm kind of doing at the moment. Got $200 in drawdown and for $350 up. So net 150 at the minute. Right, so let's have a look at where we are with everything else. ADRs, obviously, we had quite a lot hit today, which I was expecting. Not as much as I was expecting, to be honest, because we've had some fairly flat sessions across a few pairs. But the Swissies and... the Swissies are mainly what we've had the movement on this morning. So we'll have a look at all of those and see where we are with them. Again, you can't really tell whether these are going to rebound or not, as to whether or not there's going to be sustained movement in it. China's come out this morning and said about, not really said anything, which is the point. They haven't condemned the Russian invasion. They have come out and said that sanctions are not the way to go in respect of that with their own, I don't know if you know, but China have their own SWIFT system, which they developed in 2015, I think it was. So it's been around for a while. There's about 10% of the transactions that go through SWIFT go through the Chinese version of SWIFT. And they could turn around at any moment and give access to Russia for that, which will delay those, which will basically wipe out those sanctions. And obviously that will have another impact on the markets positively or negatively if they were to decide to do that. So there's all sorts of things hanging over us at the moment, which is very, very difficult to read. But the Chinese version of the SWIFT system is mainly used by the Chinese banks to talk to the rest of the banks around the world. And we can't put sanctions on that because if we stop trading with China, we can't have anything, basically. We can't have any clothes, we can't have any vehicles, we can't have any electronic goods. It's not going to happen, is it? So if they decide to fall in bed with Russia, what does the world do? So I don't think these sanctions are going to work at all. And obviously they're sitting down around a table at the moment in the Ukraine, but that looks like lip service for Putin to say, well, at least you can't say I didn't try. But who knows? So we'll see. But if there is a further escalation, it's likely that we will get more money flowing into the safe havens. So the Swiss franc will go up, forcing everything down against the Swissy. The yen will go up, forcing everything down against the yen. And the US dollar will go up, forcing everything down against the US dollar. So everything you see playing out on the ADR at the moment to do with the Swiss franc is a risky long. So I wouldn't be looking to take these. So the Swiss yen, for example, obviously is a big one today. Massive move to the upside on that one. Obviously, if we do get money piling into safe havens again and more money going that way, could go into either direction, this one, because they're both where we would expect money to get placed. So we've got 150 on that. Some people I know have had 175. It depends on where your broker opened, really. But had a nice 150 bounce and pushed up for a second bite of the cherry. So potentially looking for that sort of movement, but don't know. So be careful with these. EuroCAD, same sort of thing. On that one, this is a nice long, nice short opportunity though on this one. I don't know if anybody took this one this morning. We were looking at it this morning. It hasn't really gone anywhere. But that's a nice short opportunity. The other one I was looking at was the US dollar Swiss, which is very nicely extended. Again, US dollar is coming down to try and get that gap fill done, which has obviously meant that we've got a weak US dollar with a very strong Swiss franc. Therefore, we've got a 150 hit on that. Whether or not the US dollar, when it powers up, is going to have enough to take on the Swissy, don't know. You would expect so. But at the moment, the indices all seem to be pushing, which means that US dollars should continue to push down. So if the US dollar if the indices are going to go for these gap fills this morning, this afternoon rather. So if they're all going to try and get these gap fills completed, we will see the US dollar drop, which obviously will drop to fill that out, which means that the US dollar Swiss should drop down further to maybe 200 ADR today. But who knows? Your guess is as good as mine at the minute. So yeah, all of these ADRs, I would kind of leave them. If you've got any euros that hits to the upside, those are worth looking at because we'd be looking for short opportunities on euro. So euro CAD is a pretty good short. Euro Swiss isn't hit. That one's not hit. Euro yen has hit to the upside, so that's a nice looking short. Euro US obviously is a good looking short as well. Just going to quickly look at where I am with my EA trades at the minute. Haven't checked those since earlier this morning. So I've just got that £1 US dollar on the H1M5, which is close to break even, monitoring that. The pound New Zealand hasn't gone anywhere at all, so I've got that on twice. And these are all sitting about 1%, which is where they've been, nothing banked. So I'm not really any different to what I was this morning. So I'm going to see how these play out during New York. If we start going into drawdown on these, I shall probably close these out and just take a little bit of a loss on it. I got 17% this month. So if I have to take a couple of percent today just to close this EA down, I will do. This is the COT version of the M15H4 strategy. I don't really want this running in conjunction with the normal one, especially with COT not really, I don't think, being a bias at the minute. Just see what my strategy quant EAs are done. Yeah, all doing not too bad. So this one, strategy quant, just for those of you that were following me with the strategy quant stuff when I was doing it. Morning, Trevor. Afternoon, even. These have now been trading for a quarter. I was going to give them 3 months and then do some analysis on the results. So you can see you started these ones at the end of November. So they started trading basically the 1st of December. So end of February is the end of the 3-month period that I was going to test them over. And it's generated 40% net so far. 26% of that has been this month, which is great. But month on month, we haven't had a losing month, and 40% return in 3 months. So looking at somewhere in the region of 150 to 200% a year return on this set. So that's not bad. So I'm going to leave these running, but I'm going to extract all the results and do some analysis on these to see what results we've got from them as opposed to what the back test and the forward test and the outer sample testing was. And the other 50 have only had, I think they're on their first month, aren't they? Yeah, I started these beginning of February. So these have only been running for 1 month. Looks like month 1 is going to be a break even. It might scrabble it back to a break even today. Looks like we just banked something there. Oh, no, just closed a pending. So looks like we might close that out at a break even. So break even month is not too bad. It's not a loss, so that's good. So see how these go. But the plans for me at the moment is to just limit risk. Just got into profit on pound US dollar. Pound US dollar looks like the US dollar's coming down. We've got 15 minutes to the open. So pound US dollar, I'm just going to break even on that H1M5. That's US dollar drop. CAD Swiss. I might just close that CAD Swiss out while I've got some profit on it. Bank that. Pound CAD. That's what we got there. 1 sec. I just want to see. That's a manual I took. That pound CAD. I'm going to let that run. I'm going to let that one run. Pound CAD. I think we might get some movement on the pound this afternoon. So if we can get some positive movement on the pound this afternoon, that'll get me out of those nicely. Right. So that's ADRs. The H4s we are completely flat on. Sorry, that's the H1s. H4s, yeah, sorry, H1s we are completely flat on. No opportunities whatsoever. I don't know if anybody's seen anything on H1 this morning. I haven't really been monitoring it that closely, but we seem to be sort of 40s and 50s across the board, apart from the Swiss yen. So there's not really been a lot of opportunity from an RSI extension perspective at the moment. We didn't quite make it. Yeah, just about halfway through London, just about got extended on the hourly. You would have got out of that trade if you'd have taken it. Entry would have been there. Yeah, entry would have been there. No, about a third of an ADR, you wouldn't have got out on that. So you'd still be in that. So if you took that one, that's the only one really that's got extended today on the hourly. The 4 hourlies. We've got Euro odd, same as this morning really. Still plummeting down. Euro New Zealand, same thing as the Euro odd, still coming down. And the pound odd, which is pretty much at the moment the same thing as the Euro odd, still coming down. So we had a bit of a pullback on this one. Potentially we are looking like we're starting to get some positive market structure potentially forming on this one. So we could be looking a W on this with a 50% retracement. We didn't quite tap the 38, but it's close as damn it. So that could well have been the pullback. But tomorrow morning, obviously, is the Australian dollar rates. So if we get those coming out as expected, which is unlikely that it won't, because typically that's what it does, we should hopefully see Australian dollar weakening slightly tomorrow. So hopefully that will give that a bit of a kick. That's one of the reasons I'm leaving those pound New Zealands at the moment running that I've got on H4 and on H1, just because I think if we do get that weakening of the Australian dollar, we'll probably get a little bit of weakening on the New Zealand as well, which will give us hopefully an out on these on the pound ones that I've got long. So yeah, not a lot of opportunity there really. So plan this afternoon is to see if we can get some scalping at the Open, and yeah, see if we can make some money on the New York Open really, which is in 10 minutes. Has anybody got any pairs in particular they want to have a look at? I'm conscious this morning I didn't do a complete overview of all pairs, which is what I usually do on a Monday. But at the moment, I don't think there's a lot of point in doing sort of long-term analysis on anything. I don't think really that overall trend directions or COT has really got a lot to play with it at the minute. The market will do what the market wants to do at the moment. So I don't think whether you've got a bias long or short from a 4-hour or a daily perspective really comes into the equation at the minute, because it's all going to be based on what's happening with world events. Everything that is going on in Russia is going to have a financial implication on every currency in one way or another. So short term, there's no point in looking long term at the minute, I don't think. It would be nice to add option to set points pips in stop loss when moved to break even or break even average in the toolkit, so that the spread commission can be paid accordingly. Nice to add option to set points or pips. You could do, yeah. So you mean an offset? So instead of moving it to break even, move it to break even plus a number of points. Yeah, that should be doable. Could do that. Just writing it down. Break even. Offset. To pay commission. Yeah. EuroCAD in shorts. Yeah, so EuroCAD basically did its gap fill this morning. So that's done. So yeah, I like that short. I think that's probably, at the moment, that's the trade of the day, the EuroCAD. We've got an ADR hit, we've got a gap fill, we've got a negative bias on the euro. So yeah, I think this is probably the best trade of the day. You're not going to get a reversal alert on it because the reversal alert indicator is screwed up because of this massive gap. We're not used to handling gaps like this. So yeah, I think it's a nice short. Anywhere up around ADR today. That was the rejection we looked at this morning, wasn't it? That nice double top and started to pull down. We broke these lows. So in effect, we've got market structure starting to form now for a short. So yeah, it looks good. Could be tricky with auto trading if you close at break even plus spread and the EA would just reopen the trade. No, the EA won't open any trades. The price action EA will only open trades on price action. Won't open it just because you've shut something. You will open it on price action. And that's, I think, what Rahat's talking about there is the manual button. Fully automated trading, there is no such thing as break-even on that. There's no break-even facility on that. There's a trailing stop, but it's just the button. Right, so let's have a look at where we are with the indices. That's the wrong EA. Right. That's not going to work, is it? Too many buttons. What shall I trade? I think what I'm going to look at is S&P and the DAX. So just move that over there. So I'm just going to watch these two at the open and just see how we get on at the open and see if we can figure out any directional bias really. Let's go 4.8, that'll do. Had fun shorting the S&P. You had fun shorting the S&P. I've got a little short on the S&P at the moment on my futures. I'm just trying to figure out a bias on this thing at the minute. Swiss yen for a sell. Your guess? I don't know. Honestly, don't know. Depends whether a nuclear missile with a 1 kiloton warhead hits Kiev this afternoon. And even then, I couldn't tell you which direction this is going. Really couldn't. At the moment, from a technical point of view, beautiful sell. Yeah, definitely. Lovely pullback down into there and then a continuation to the upside. But I have no idea at the minute. Technically, yes, we're triple topping. But other than that, I don't know the bias. I really don't. But yeah, it looks nice from a technical perspective. We've got an ADR reversal, obviously, playing out on M5. And a nice potential drop down into support of 40 pips. So yeah, it looks good. Looks very good for us for a short. But who knows? At the minute. Euro Swiss, do you think the gap will fill? No idea. Euro Swiss, gap has filled. Oh no, that one hasn't. Yeah, no, don't think that will fill. No, is the other one of the other ones the gap had filled? No, I doubt that very, very much. Very, very strong Swiss franc at the moment. No reason why the euro would be able to strengthen up enough to fill that, unless the Swissy weakens dramatically. I don't think that one will get filled. I don't know that. I mean, honestly, you could ask the best economist in the world at the moment, and he won't have a clue. Scratch his head. No one knows. What is going to happen is going to be based on what happens in Russia and Ukraine, and the world's finances revolve around the US dollar as the world's currency. And at the moment, the SWIFT banking system is run by the US, and they've just pulled out one of the major players. So, couldn't tell you. What I do know is that it will go up and down these candlesticks, and we'll have price action, and that's probably the best thing to trade at the minute. Nasdaq's down 13%. Yeah, everything's down 30. Everything's down. Down. Kiev is closer to Switzerland than Japan, so if it gets nukes, yen would be better. Yeah, that's true. It's not. No one's going to drop nukes. That would be very, very, very silly. He's not that stupid. I hope. I think the thing that's going to affect movement at the moment is more to do with the banking system, and I think at the moment the biggest player in this at the moment is China, and whether China turn around and decide to help or hinder the situation, or stay neutral as they are at the moment. I think that's probably our biggest worry at the minute. Harry, your thoughts on possibly longing US dollar Swiss? Yeah, I'll be longing US dollar Swiss, definitely. Because if we do get a rush into safe havens, the US dollar will beat the Swissy. There'll be more running into the US dollar than the world Swiss. So that will go up. But you'd be better off trading something else like the US dollar CAD, because you're going to get much more movement on the US dollar CAD. S&P is going up. Just about to wipe out all my profit for the day. I can't read this market. Cannot read this today at all. Literally, I've gone from $350 up to, at the moment, I'm just about to go out at $40 negative. Sitting on your hands day. We'll have a crack in here though. See if we can get an open. The opening range is going to be absolutely huge on this. Big opening range candle going in at the moment. Maybe I'm not going to get stopped out on my S&P. I'm shorting this, by the way, on my futures platform. I'm shorting this at 43.26. Actually, it's different on futures. I'm shorting it around about just under that candle high there. I'm short from there. I'm just going to stick another pending under there as well. I'm sticking a pending at 43.20. We're either going to get this. I think what's happened today, I think we've either had a go at this gap fill and we've failed. And if we've failed, I think we're going to head down. So I've got the short on and an add to the short. If we are going to go for this gap fill, I think it's going to be a very slow, grindy, horrible move this afternoon. And then when we get that gap fill, I think we're probably going to come down pretty hard. So I think the play today may well be actually to wait until 2 or 3 hours before the close and play a short on it. then. But we'll see how far we get, and if we get anywhere, basically. Today's a bad day to trade. Yeah, I think this should be nice. I think this week is a bad week to trade. Last week was a bad week to trade. We were lucky last week, I think, with the positions that we got on and the movement, because the movement was a little bit more unexpected, and we were having a lot of whipsaws. I got a feeling that we're going to see those whipsaws now turning into sustained moves as we see this thing unfolding. When that meeting finishes between Russia and Ukraine in Belarus, and they come out of there with either a no surrender or no agreement or terms or anything in any shape or form, that is basically the green light for Putin to say, I tried. We couldn't find ground that we're happy with, therefore carry on with the invasion. And then he's going to roll out more troops and go in harder. So at that point, we should see a sustained direction, because there's probably not a lot that's going to be able to change what's going to happen. So the markets will have an idea on where they want finances to go, and therefore things will start to move a little bit more sensibly but fast in one direction. That's my suspicion anyway. But at the moment, you can't really pick a direction on this. So it's a tough market. Need to close the gaps and go from there. Yeah, the trouble is, though, tomorrow I think you'll probably find there's more gaps. I think the play is really to do if you're going to play these gap fills, you've got to be doing them with a view of, like today, the gap fill play today was after you saw this closing back above the 20, stop under there and commit to the gap fill. What I've been doing today is trying to scalp in and out of the gap fill, move to the upside, and I've been doing okay, but you get caught out. The thing to do is literally hit the buy button, shut the thing, and either take it or don't take it. I think you've got to be more cut and dry of, like, either take my stop out or take my profit, rather than trying to get in and out and make money along the way, which is what I've been trying to do, because that's the best way to get money, obviously faster, is to jump in and out of the moves as we're piling up, and I've done that this morning. But you get caught out a couple of times, and it hurts. Every time I consider trading again, the world goes haywire. Yeah, I'm stopped out of that S&P now, so I'm going to shut my futures down. That's $38 loss today, which is nothing, but I'm shutting it down with a $38 loss, and I'm not going to trade it anymore. I'm not going to even try. Too hard. Right, so let's zoom in. So opening ranges are in. It looks like it's going long. Coming up to those highs. I've just got 0.5% on that. So I'm using the opening range low as my stop on this. I'm going for the gap fill. Straight after the opening, an FTMO and a Top Step account, war broke out. But the magic is still working well. Yes, cool. I'm going to scale into this gradually. If it goes our way, obviously. 5 and 90-minute opening range breakout strategy works also for Forex or only indices. I don't know. I've never really tried it. I've only ever traded stocks with it and indices. So you'd have to try it. Have a look. I mean, the thing with the EA is you can stick it in the strategy tester, pick an FX pair, and see what it does. So let's pick pound US dollar. I haven't got my data on here. Yeah, I haven't got my data here, so I can't really go back far. But I mean, stick it in the strategy tester and visually look at it, see what it does. After it's finished collecting in one data. Just watch and see what this is doing. Bit of a pullback. Actually, should well, that'll do. So yeah, forgot to stop it. I was just going to turn off the second opening range so we can just see 5-minute opening range. Well, actually, no, let's look at both of them. Might as well. Shut that one down. So I'm just keeping an eye on this, see what it's doing. So if you want to actually see visually what happens, you can just let the EA run, and then before it gets to the end, just pause it, and then go and have a look at what's happened. That's the best thing, the best way to do it. I mean, you can test it, obviously, have the EA take trades automatically for you. You can set it up to auto trade this opening range. But, you know, just look at it. Opening range, there's your 5-minute opening range break there. So there's your opening range low and high. You had the breakout there, went long, came out, took you out. If you'd taken it again, it would have been a lovely trade. There's your opening range break there. Opening range high, break, lovely trade. This is pound US dollar, obviously. New York, 5-minute opening range break, flew. 5-minute opening range break high was there. Nice move. There's your New York. 5-minute opening range break candle was probably there. I mean, again, with these opening range breaks, it really depends whether you take the initial break, whether you wait for candle close. If you wait for candle close, you're going to get a better signal. If you don't wait for candle close, you're going to get in faster. So again, there's a preference thing there. As standard, the EA basically works on candle close. There's your 5-minute opening range there. The low would have stopped you out. The high would have taken you up to there. So loads of room there. So that one worked. Opening range there. There's your opening range break down. That one worked. 5-minute opening range is there. Break there. That worked. I mean, go through it and test it yourself. But yeah, it seems to work absolutely fine in FX as well. Massive move to the downside. Opening range high broke there. Long move. Yeah, you're easily going to get a 1-to-1 out of it, 1-to-2. It depends how greedy you want to get. And obviously you can set the EA to do this for you. So if you get the EA to take the opening range breaks for you, you can use a risk reward. You can use a pip amount basically, but the EA will automatically trade these by putting a trade at the other side of the opening range. Yeah, so the trade taken. Did that take a trade? Did I set that up to take trades? No, I thought I set that to true. What did I set to true then? Something else. Let's go with an exit at 0.5%. Let's go for 0.5% on an opening range twice a day. So we're looking for 1% return a day, basically. Yeah, so there you go. So it took a short there, stopped out, took the long there. The long gave us 0.5%. And again, you can play around with the figures and muck about with it to optimize it. So there's your short opening range break to the downside. Stop goes at the opening range high. That one stopped out. Yeah, see that one stopped out both times. Stopped out there, took the opening range break high, stopped out there. But if you're going to scalp it, you know, it's difficult. This is, like I say, I have not tested this at all. From an automated perspective, the idea is it gets you into the trade and you decide on price action, basically, how it's going to go. That one worked beautifully, but got stopped out before it flew. So, but they will work. Lots of them will work. Lots of them won't. But that's what the tester's for, to go and find out what is the best optimal setting for it. But as I say, I'd trade it on basically what's going on price action wise. So, Trevor, I committed to the gaps plus scalped. Only EC decided to squeeze. Yeah, it's difficult. How about hedge strategy on the breakout lines? I've got an EA that I'm developing at the moment to test that, which I've got an EA which I'm developing. I haven't got it in here. I don't think. No, I haven't. So I've got an opening range EA which hedges the opening range until a percentage increase is achieved. I'm working out the best way to trade it at the minute. I'm still working on it. I haven't had a chance to get much further on it, but yeah. But that was using martingale, which, as you know, can be dangerous. So the simulations I've done either worked phenomenally well and made an absolute fortune, or they blew the account. And the problem is not the account size, it's the limitation on lots. The tester will not let you trade more than 50 lots. So therefore it cannot action martingale properly when it gets to 50 lots. So you can't actually test it, which is a problem. But if it gets to 50 lots, I'm not interested anyway. So what I'm actually looking at is a sort of a semi-martingale, a kind of a hedge recovery system, which is using multipliers of 1.3 and 1.5 to see if that is better, because you don't get that many moves like that. It goes one way or the other, and it's just getting you into that percentage increase, which is what I need to calculate. And then obviously work out how many times it's worked, how many times it hasn't, and figure out if there's an edge there, basically. But yeah, that's on my to-do list. So the DAX is sitting within the opening range at the minute. The S&P is broken out, but not really gone anywhere as yet. Nasdaq still within the opening range. the Dow pulled back in as well. So the Dow and the S&P are doing very much the same thing at the minute. The other thing that I want to test as well when I get a chance, because I haven't done any testing at all from an automation perspective with this, is just to test whether or not there is a better edge on a 5-minute break, a 10-minute, a 15, a 20, a 25 and a 30-minute break. The 5-minute is, for me, the best because your range is going to be smaller. The wider that range, the harder it is to actually make money out of it. So you want to be in and out fairly quick. DAX seems to have gone to sleep. So we've got equal lows put in there, look, as well. One thing somebody's mentioned to me, this doesn't do alerts, somebody said, the price action EA. We've got an equal low there. Got put in at the 5-minute opening range as well, which is obviously bullish. It doesn't do alerts as in pop-up alerts or anything. No. It's designed to paint the alerts on the chart. So somebody was asking about that. I get the feeling if I build an alert system into this, you will just find it will ping at you constantly all day long and become absolutely drive you nuts. Which is why I haven't got an alert system. But it's something I might put in if people want it. But I think you'll turn it off because you'll find it will just ping all the time. Especially if you're using all price action candlestick patterns. If you're using every single candlestick pattern there is there, you're going to get one every other candle. There's always going to be a bearish engulfing, a bullish engulfing, or a long wet candle popping up, isn't there? In fact, I'm just going to look at the size of those candles. 140, that's fine. Bit of an accumulation going on at the minute. Afternoon, Neo. To trade the DAX and the S&P, should the NAS be followed for directional bias? Yeah, you can do. I mean, they're all going to move the same. You don't know which one's going to be in charge. You'll quite often find that the DAX, the Nasdaq or the S&P will be leading. One of them will be moving faster than the other one. You don't know which. But they all move the same way, basically. But, you know, I'm seeing the DAX now fly, so I would expect the S&P to go as well. One of them will quite often move first. You don't know which it's going to be, which is why I quite often like to watch all of them. Now I'm sitting here thinking I really wish I'd have put my futures account long and just gone for that gap fill, because that probably would have been a very nice move. But futures is for scalping very small time frames rather than swinging. Switzerland has joined the EU in sanctioning against Russia. We knew that already. They've also sent 500 Javelin missiles to the Ukraine as well to help them out. We've had news on PMIs at 245. So that was that candle basically. The PMIs don't seem to have had any effect whatsoever. US dollar is still going for its fill. Only got another 13 pips on that. Sorry, Trevor. I've just seen your P&Ls you've just posted in the group. Very good. On your Top Step and FTMO accounts. Blimey. Pass both of those, that'd be a very nice amount of money to have to trade with. We're rejecting the highs at the moment on the S&P. Lots of wicks up here. Lots of rejection. Sellers stepping in at this gap basically at the minute. That's not a gap. That's can ignore that one. That's bullish. That's a bullish gap, not a bearish one. So obviously the gap should have been a candle, which should have filled that. That shouldn't be there. That's the other thing I'm seeing so much with various indicators at the moment. All this movement is throwing indicators out left, right, and centre. Just not stuff's not painting as it should be. For position trading to be super safe, what would be the best way to pick two pairs for each currency? The best thing to do is to try and pick pairs which have opposite sessions. So pick an Australasian currency against a UK currency and an Australasian currency against a US currency. So that way you've got the Asian session trading the London session and the Asian session trading the US session. And then pick something like the pound US, which is obviously trading the London session and the US session. And just make sure that you've only got a maximum of two of each. There's no right or wrong way to pick currencies. What I would do, think about the major currencies. You want two US pairs in there, max. So obvious ones to choose would be the pound US or the euro US. That way you've got £1, £1 US, or €1 and €1 US. and then pick the pound against an Australasian pair. So pound New Zealand or pound odd, or euro New Zealand and euro, or euro odd. And then you want to pick something against the yen. So you could go with Aussie dollar yen. So those two are both in the Australasian session. And then you want something over this way. So maybe the CAD yen. So you've got a London and New York against an Asian with a yen pair. There's no real right or wrong way to do it. Which is why I don't really have a pair selection as such. I do for the EA at the moment. But you're better off waiting for opportunities. So wait for H4 to get extended, and then pick one. But if you want to let the EA run on a pair, wow, there's a big rejection. Absorption just happened there. Did you see that? Yeah, you just have to pick pairs. But obviously the danger of running the EA on specific pairs only is those specific pairs may never get extended. Therefore, you may never get a trade. And then every other, you might have picked US dollar CAD, for example. And then US dollar CAD for an entire month doesn't get an H4 extension, so therefore you don't get a trade, except every other US dollar pair and every other CAD pair got it massively extended. But it just so happens that the one you picked didn't. That means you just missed trading opportunities for the month. So you're better off trading what gets extended. But there is an argument for putting the EA on every pair, like I've got, on, let me just open up. All thanks to me, Trevor. Well, it's not all thanks to me. You did the trades. Got to take some credit. You could just stick the EA on every single pair, all 28 pairs, like I've got here on the COT bias account, which is going into drawdown. And manually manage it. So if, for example, because I've got 4 exposures on the pound, you can see I'm massively overexposed on the pound here. If the pound drops dramatically, I'm going to be in a bit of trouble on this. So to stop that, when you see a pound coming on, have a look at 4-hour extensions on the other pound pairs and turn off all the other pounds. So go into pound Swiss and just, turn off pound Swiss. Yeah, just stop pound Swiss trading for the minute. So you can do that. You can go in and manually put it on all 28 pairs, but turn off some when you get exposure on. Pound US, that one's gone into profit now. Pound New Zealand's not. So we've still got a weak pound and a really strong, a really weak US dollar, which is obviously kicking that one up. The pound's going to strengthen at some point soon. So hopefully this afternoon. Wish to run 28 pairs by the EA and a VPS with COT bias. Yeah. But you've got to be careful of exposure, as I've just said there. You will get, if you run it on all 4 and don't keep an eye on it, you will get overexposed. That's the danger. Overexposure can be a danger and a blessing. If you get overexposed and suddenly the pound flies, you're going to have 4 trades go your way. But if they go against you, you're going to feel the pain. And obviously you're assuming there that you're going to do this once the Russian situation cools down. We're assuming the Russian situation is going to cool down. Some people are calling for this to be a protracted land war over many years. But I think regardless of whether they decide to do this for many years, there will be a point where it will all calm down. But we've still got the long-term impact of COVID I don't think we've seen yet. We've still got to pay for that, the world. To turn off manual, yeah, it's a good idea on the 128 pairs, yeah. So just turn off. So if you get exposure on 2 US dollar pairs, just whiz through quickly and turn off all your US dollar pairs that are not already running, just to make sure you don't get overexposed on them. And occasionally you might get 3 hit at once. If that's the case, that's the case. There's nothing you can do about it. We're not really getting a lot of movement at the moment on these. How far has that US dollar got? No further. So I've got a bit of a contraction potentially starting to form on the DAX. Bullish. We've got indice divergence with the American indices and Europe. It's all looking bullish still though. The European Council is holding a press conference at the moment, which is live on TV if anybody's interested. UK are going to hike sanctions against Belarus and other Russian collaborators. They're thinking about implementing even more sanctions on top of what they've done already. Again, more financial impact. Okay, we're getting a bit of a rest starting on the indices at the minute by the looks of things. You see today the 50. This is why I use the 20 and the 50 basically for directional bias when I'm trying to scalp. The 50s, if the 20 doesn't hold, the 50s very good in a trend. So nice bounces there. So looking for price action around the 20 and the 50. We're going to see if we can get back down to this level. I might add a second position into this. Can you also run the EA side by side on DAX for auto trade to see if it's performing well? Can use the lowest risk. What do you mean by auto trade? Well, it's going to. I mean, auto trading would only trade on candlestick patterns. So I don't really want to trade both of these together. No. Otherwise, I'm doubling my exposure on an indice. Just taking a second long there. Just rejected off of the 20. Just getting my average down a little bit. If you want to test the auto trading out, you need to basically just run it through the strategy tester. And I haven't got anything that I'm confident to let this thing just completely auto trade for me at the moment. Especially at the moment with what's going on. I don't know what I want it to do at the minute from an auto trading perspective. I've got the EA. I mean, the main thing that I use this EA for is to add to my positions. So as we push, the EA is going to scale into my winning positions for me to increase my return. That's the main thing. I don't really want to use it for getting me in on candlestick patterns. I know candlestick patterns. I don't really need the EA to. It's really there for people that want to have it take trades for you automatically if you're not confident in identifying the candlestick patterns. Really, that's what the auto trading is there for. But Hamza was going to go and have a look, do some back testing this weekend. So I don't know if there's any results he's got. Just moving the stops just outside of the opening range low. Just don't want to get stopped out on a wick test of the 50 like that. Don't mind getting stopped out if we are actually going to break the low today. So that's 4. So that's 1. That'd be 2. I'm just getting prepared to get into additional positions if we're going to go short. Still think we're going to come up and do these fills though. Could set this one to auto trade, I suppose. But the trouble is at the moment, it's going to. There's no directional bias here to trade, is there? We're sideways. So I kind of want it to take longs. So I could get it to auto trade, I suppose. Going with a small risk. And get it to get me out with a small reward. And I'm going to need to use the 200 MA. Because I definitely want longs. And we'll take strong closes, we'll take long wicks, we'll take bullish engulfings and IRBs if we get any. And let's take them all, sell it. There we go. So that's set up to auto trade if we get any price action. if we get any price action. Moment we're in a deep pullback. So market structure is still solid at the moment. We don't want to break this opening range low on the DAX. And the same thing here, really. And there's lots of market structures. Very uneven market structure today. That's what I was going to have a look at. See if I've got the ruble. Whoops. No, I didn't want to do that. Whew. Now that's what I call a gap. So that's not been filled. And that's with a weak US dollar as well. So we gapped down basically on the US dollar. We didn't manage to get that gap filled. I've never really looked at the ruble. 31,000 ADR. Wow. That's pretty big. Let me stick a 200 on there so we know where it is. Oh, that's going to take shorts. I don't want to take shorts. So this is the problem with auto trading. I'm not even sure there's a... No. That's not going to work. I'm going to need to change that to back to the 20. Where are we? 50 actually. I'm going to use a 50. And hope this candle closes above the 50, and then we'll start getting price action on 50. Didn't realise the 200 was all the way up there. Of course it is, because we've gapped down. So holding the 50 nicely down here. DAX is coming down harder. I guess this is a good hedge to take. So the EA is going to automatically hedge me in short on this trade if there's heads as a strong close. So if this one doesn't work out, I'm automatically going to start shorting anyway. So Still haven't broken the opening range low. Okay, candle's closed. So there's no pattern there at all. So there's no trade taken on the auto trading. The UN General Assembly meeting is on at the moment in New York. Maybe can add an option to also set direction, long, short, or both. Yeah, you could do. I mean, the moving average will do that for you. Don't forget, this is completely abnormal trading conditions we're in at the moment. You're going to experience this probably once or twice in a year, having ridiculously large gaps and price action like this. It's just nuts. So this is not normal. You don't really need a filter for long or short. The moving averages will do that for you. If you're above the 50, you want to be longing, or the 20, you want to be longing. The reason for me going long here is literally for the gap fill. The CA is not built or designed to trade gap fills. So I'm trading manually here the opposite of what the EA is designed to do, which is trade in line with the trend. I'm trading counter trend against the gap. So you don't need to have a filter long or short. That's what the moving average does. You want the moving averages you want the EA to get you in long or short in line with the trend. The moving average is the only trend indicator that works. So really, and that's lagging, but I mean, it's just, that's really all you're going to use for a trend direction is a moving average. There's not really any oscillators that do trend very well. So that's the best thing to filter with. Could put it in, but I mean, you'll find it won't make any difference in backtest. It won't help you at all in backtesting. But manual trading, obviously, you don't need that because you're the decision maker as to whether you go long or short, aren't you? Okay, we could see quite a bit of absorption coming in here. If this is going to hold short, potentially we could be looking at this just being a pullback on a move down. There'll be a lot of limit buyers jumping in short up here. Seeing this as a 50% retracement on that move. Okay, we've got 40 seconds left on this candle. So as it stands, this is going to close as a strong close candle. which means the EA will get me in to a long. Let's have a quick look at what the others are up to. The Dow's come off the opening range low. There's an IRB long. There you go. So we've got a buy stop above the high of that candle, which is a strong close candle. So if we break that high, we'll get gathered up into a long position. I'll do some research. I'll see if I can get some decent set files for auto trading that are fairly conservative, like real, scalping 0.1% type, where we're going to get sort of 80-90% strike rates for very, very small gains, and maybe we'll have a session where we'll just set it up on all 4 indices and just let it do its thing. Okay, nearly getting gathered up into that order up there. There we go. So in a buy long on the DAX. David, I banked 1% off the Euro CAD sale. Filled the wick on the 4-hour Euro CAD. Oh, very nice. There you go. Anybody that took that ADR reversal today, like David, nice quick exit. That was the only one that looked good today, that EuroCAD. Gap fill. Obviously, miles short bias on the euro. I thought I had that set to close. No, I haven't. Okay. So just taking an additional long on the DAX. That's basically the scaling in feature on the EA, getting on automatically. I thought I had that set to candle close, which I haven't. So that's getting me in regardless of just getting me on positive price movement. To be honest, I think it's better to use candle close on that. Because you run the possibility of that happening. You're getting wicked into a trade and then pulling back. And obviously, every time you get into a new position moving forward, your average is moving up with you. But see how that plays out. Okay, so we got an IRB there. Inventory retracement bar. Which is a minimum 45% retracement from the high. Which is basically bulls being absorbed. And then the entry is a break of that candle, which you would have just got into there. If you took it. But I'm already in it. There we go, third position on. So scaling me into the winners every 100 points. And getting me out at a 0.25% profit. Or 0.5% profit, sorry, not 0.25%. So keep your eyes on that. Nice push on the S&P. Should push the DAX up. There we go. So that's automatically exited those trades. 0.5% profit. So 3 entries. And out. Nice easy trade. Michael, I didn't take that Euro CAD because the 4-hour RSI wasn't extended. Yeah, it's up to you with the RSIs. Obviously, as a confluence, you're never going to get a 4-hour RSI extension on this. I mean, we have, but it's going to be rare. Euro is kind of just take any short you can find, any pullback you can find on it, really. Especially a gap fill, which was a lovely one this morning. But yeah, if your rule is RSI extension, good on you for not taking it. You followed your rules. So 50 bounce basically is confirmed potentially bullish move. We need to break these highs and then confirm market structure long, which looks like we are going to get our fill. Still got 30 odd pips to go yet. If you're looking at Edgewonk, Rahat and Trevor talking, I can see you talking in the Telegram group about it. I've got Edgewonk. I used to use Edgewonk about 4 or 5 years ago, maybe even less. Really, 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 really good journaling tool. Probably the best out there. I don't know how much it is at the moment, Edgewonk, but it's well worth getting if you want to find a journaling tool. You do have to manually download from MT4 into it, but it's a really, really, really good bit of kit. Lite is unavailable. $169 a year. All right. Yeah, so now it's just $169 a year. But yeah, it tells you loads and loads and loads of stuff. Really, really good. Gives you loads of insights into you as a trader. Your weak points, your strong points. It's brilliant. Go and have a look at it. I think I had the light version. Although I'm not sure. Can't remember now. I'll have to have a look. It's on my other machine, but I don't use it anymore. That's more if you're using stop losses and specific strategy. If you're trading multiple strategies, it's a really, really good bit of kit. So I just entered another long on the DAX. We've got a strong close signal and scaled into second position. Stops are a little bit tight on this. I should really be trading with wider stops than that. In fact, what I might do is switch over to ATR and use 2 ATR. It's a bit tight. I'm actually trading with 0.5% on this as well, so I just want to be a bit careful. I'm just going to move stops up and reduce the risk on that. It's not quite. I haven't set that one up properly. It's a bit of an impromptu auto trade session there, so I don't really want to get too much risk on. I'm going to get that to scale in on candle close as well. .5% closed out, so that's 1% banked on that auto trading. That's done for the day basically. 1%. I got 1.6% on there. I'm just going to close out that most profitable trade there and bring the stops up. Just reduce risk and put some money in the bank. Still going for the gap fill. In fact, I can move my toss. Whoop, not that high. So still going to go for the gap fill, but just scaling out of that one. Gold dropping, is it? Not that much gold. Gold's done its gap fill, basically. So, got the gap fill done in Asia, or rather at the London Open. So, it's not really gone anywhere in New York. We've got bearish engulfing in, but that's about it. So, US dollar's still not got down there yet. Trevor, I used to use it before it was web-based. Oh, it's web-based now, is it? Yeah, I've got the software version. I've just realised I changed my... so this is one of the things you need to be a little bit aware of with this EA. I changed my risk parameters to 2% when I was looking to do a short. And obviously it's taking that into account now when it's placing my additional trades. So I'm just going to close that one out because that's too big a position. So I'm just going to replace that with a proper sized position, which is 0.25%, not 2%. That's too much to risk. Would have been very nice if I'd have held that position on, but I'm not going to. That's stupid. Just going to pull my stops up a little bit, lock that position in. Big absorption there. Still got about 1/4 of an ADR to go on the DAX to get that gap fill in today. Getting a lot closer on the S&P. This will probably be done within the next hour. Then when we get up there, going to start flipping for shorts. Just a bit concerned about this area here. We got with a gap fill. It doesn't always do the gap fill to the pip, and quite often it doesn't actually. So this is where we actually closed. Let me just draw it in so we can see it clearly. So that was the actual close of the candle, which was 43.82. But the territory we're in here now. Sort of anywhere really in this zone could potentially be the area where we just get to. And sort of pause at. So anywhere really here now is potential for shorts. We haven't hit ADR yet. So realistically, that's probably where we're going to be aiming for. But just be aware, obviously, now is where you want to have your wits about you a little bit in case you get a really nice big bearish engulfing going in or some really bearish price action. In fact, what I might do is I'm going to switch on the exit strategy for close on reversal candle. So what this is going to do is it's going to place an invisible stop loss at the low of the last bull candle. And if price closes down below that level, it will auto exit the trades for me. So it's basically going to drag an invisible stop up every time we get a bull candle. And we're going to get out if the market turns bearish. So if at the moment with this candle here, if this candle closes here, that's fine. If the next candle then closes there, that's fine. If we then close there and close there, as long as we're closing within this candle, it will keep me in the trade. If we close below that low though, it will exit. So it's basically, I'm telling the EA basically, if you see signs of bearish price action coming in, i.e. bearish reversal, bearish engulfing like that, for example, get me out. So I can now walk away and leave this. And if we do get a massive bearish move, I may not get out at break even. I might get out with a loss. You know, if that candle comes and closes down here, I'm going to make a little bit of a loss, but it's going to get me out automatically. The web version is prettier, is it, Trevor? The veg wonk? Yeah. Yeah, I've got the PC version, say, on my other machine, but I didn't know they'd gone web. I might log in, actually, and have a look and see if I can use their web version now, because I've got a license for it. But it's annual now. See, my license was a lifetime, so I suspect my PC version is not compatible with their web version. They've moved over to the pay-per-year version, which is what everybody's doing nowadays. Extracting money from you on an annual and weekly basis, rather than letting you just pay for something, which is a much nicer way of doing it, isn't it? Strong close candle, automatically taken an entry on a buy pending order there. Stop loss set. Stop loss is set at ATR. So this is 745. So it's obviously taken a much smaller position for me based on my 0.5% risk because I've asked it to use ATR. And the ATR is obviously based on the ATR of the last 5 candles. So wider stops because we've got big, strong price action. If we had very tight price action, I would have a tight stop. Okay, so keep an eye on this. Remember, I've got a invisible stop. This would be a good test of this feature, actually. Okay, 30 seconds left on this candle. We're just going to close as an inside bar. So as long as this closes as an inside bar, my stop will still be there virtually. And when we get the next bull candle, then the stop will jump up. So I've just had a big hammer go in there. So you can see that on the DAX, we've just had an IRB signal. So I've got a pending buy sitting above the high of that candle. So if we do get continuation move, so this is absorption of the buyer's move. So we're looking probably for a couple of candles down now, and then a push back up through that level. That will show a continuation for the buyers, and that will jump me back in with a new position up there. Got some bullish price action coming in on the US dollar. So didn't get the gap fill. Looks like it's starting to push away now. I've had a reversal alert on M5 and a retest. So it needs to break that high to give us bullish price market structure. That meeting of the UN seems to be going on for quite a long time in New York. At 4:15 this afternoon, NATO Secretary General is holding a meeting. Another phone call with lots of leaders. France, Italy, Germany and the EU to hold a call at 7:30 this evening. So there's a lot of talk going on about potential further sanctions. Hopefully just potential sanctions anyway. UK government has announced it's going to freeze assets on all Russian banks within days. That's a good idea. Why don't you give them a bit of notice so they can take all their money away? Okay, so starting next leg push up. We've not had a red candle since 20 past 3. So big, strong move on the DAX. Doesn't seem to be stopping. We've got an IRB put in on the S&P as well. So if I had auto trading turned on for candlestick patterns, that would be placing a pending order there, ready to get gathered up when we have the next push. If, obviously, which would have just been triggered there. Okay, S&P is just trying to make new highs here. See if we get a little pop here. If we get a pop through this, it's potentially a good sign that we're going to get a continuation. Loads of absorption. There we go. So we've got the pop. So we've absorbed all the selling orders that were sitting up there. All the sellers have basically exited their positions short. So that little pop that you saw there was everybody that's entered short there. All their stop losses being taken out. And the buyers absorbing all those stops and pushing higher. So we've got more sellers stepping in now. Just been gathered up on that order. Bit of selling pressure coming in. Got 2.5 minutes left on this candle at the minute. So my invisible stop loss is now sitting under there. Was sitting under there. So obviously we had a new bullish candle formed. So if we get a bear candle break below that low, that is where the EA will auto get me out at the moment. I'm just going to close this out manually for a minute. I got too much on with this and this. I just want to turn this off of auto trading for a minute. It's a good demonstration, but we're very, very, very extended away from this moving average. We're going to get a pullback. And I don't really want to go into drawdown on it. So I'm just going to turn the auto trading off on it for a minute. But it gave you a little bit of an example of how it works. I just don't really want to be trading on two indices at the same time because they're both going to do the same thing. So looking to see if we can get a bull close. Got another minute left on these candles. Be nice if we can get a bull close above there. So that would be the accumulation block. Accumulating new long orders to go higher. Got 12 pips to go until the high now, until the gap fill rather. we're meeting some sellers up here. We've got some wicks going in on the DAX as well. I imagine got the same thing happening on all the indices at the minute. Dow's pushing up new highs. Okay, so we've got another bull close. So my invisible stop loss is now sitting there. If we get a bear close below that candle, I should be out. So we've got 1.6% on this. So we haven't got far to go now. Just going to reduce my TP down just to make sure that I get out just before we get the gap fill complete, because quite often we'll find that we'll have, there's a lot of people playing this gap fill at the moment. There'll be a lot of orders up here, not sure where they are. What you don't want to do is have an order right on the gap fill and then we get absorbed up there and then start that drop. So I want to make sure I get my orders in early. I'm thinking about just closing out this position. So we got a fairly big wick there. I might wait and see what the close of this candle is. If we close bearish, I might just close out the most profitable trade and then just reduce the risk on the other. In fact, I'm going to reduce the risk on those now anyway. Okay, pushing up through ADR high on the S&P. Just training my stops up a little bit more. Just want to get to the point where I cover this position. Just in case. Okay, didn't quite manage to break the high of that candle there. So we just got an inside bar close there. So this might be the start of a pullback. So my stop, invisible stop now is sitting under that low. So if we get a close below that low, i.e. bearish engulfing with a close fully engulfing that candle, that'll be me out anyway. So we'll see what happens with the price action on this one. We've got another 4.5 minutes. Could just pull back, give us a nice long wick to the downside and then push back up again. But we're so close to target now. Just starting to tighten things up a little bit. Just taking another position there. That's an add, which has brought my average up now, unfortunately. So the only problem with averaging in, obviously, or adding into your winners, it brings your average up. So quite often, good thing to do, if you're going to average in and add more positions as you're going up, close out most profitable trade. And then obviously, if you get a close down below there, it's just going to get me out of these two positions roughly around break even. So it just means I bank that position and then just close out break even on those two. Or thereabouts, but hopefully we'll just wick down and push up to target on those. Potentially looking at our first bear candle for the last, nearly hour on the DAX, but a solid push. US dollar still pushing down, just made a new low on the Dixie. So still looking like it wants to come down. 150 ADR basically to that gap fill. Okay, got 30 seconds left on this candle. Looks like we're going to get a close down below, potentially. Maybe not. We might get an inside bar. We'll see. If I get close below there, I should get out of the trades. Bearish engulfing on the DAX starting to form. Got an inside bar. We've got bearish engulfing on the DAX though. I'm going to close these out manually. I'm going to take 0.2% loss on those, only based on the fact that DAX has got bearish engulfing put in and it looks like it's pushing down strong. We'll probably get the continuation move the same on the S&P. Probably into this area here and then get supported by the 20 and then hopefully push up and get that gap fill in. But as I said, this area here, this whole area is potentially an area where we could see rejection. So I don't really just want to hold it and potentially take a loss. I've banked a fair bit on that. So it's been a pretty good session. So I don't really want to just take a loss for the sake of it. It's probably going to push up now, look. But that's fine. I'm just worried about getting a very large wick candle to the downside, sort of big, strong move down that finishes bullish, and just getting taken out for like 1%. So looks like that's not going to happen though. But anyway, that's me done for the session. So pretty much got the gap fill. So played that nicely. Started entering positions from down here, didn't we? And then, yeah, from the open, just been scaling in long on the gap fill and out. I think I've probably done about 2.5–3% on that. Banked about 1% there. So pretty good afternoon. Better than I did on the futures anyway. So futures, I was up $350 on the futures and gave all that back basically. Trying to do exactly what I did on the S&P there. So overall up for the day. So that's good. So that's all I've got for you today. I put a little poll in the Telegram group yesterday. This morning. Seems like ages ago now. Asking about the morning session and potentially doing some starting the morning session early, basically at 10 to 8 instead of starting at 8:30, just so that we can trade through the DAX open. So everybody's kind of overwhelmingly yes to that. So I'm going to start to do that, I think. I'm not going to do it tomorrow morning, because I've got a feeling tomorrow morning I'm not going to be able to do much of the live session anyway, because I've got builders arriving, but I don't know what time they're coming. So I'm going to plan to do the morning session at 8:30 tomorrow as usual. But there's a caveat there that I might have to just cut it short and run. And I'll do the afternoon session as usual. So what I'll probably do is say from Wednesday, I will start to do the live sessions earlier. Thursdays I can't because I have other commitments, so I might have to move it back again, but I'm going to play it by ear. But I'll say Wednesday I'll probably start the early one, but I'll put a message in the Telegram group. And obviously, if you're not subscribed and got the notification bell hit on YouTube, I would do that, because obviously you'll get a notification when I go live anyway. So, but I will put information about that and the timings and everything in the Telegram group as to what I'm going to be doing. The afternoon sessions I'm going to leave as they are, starting at 2 o'clock, I think, and then we'll just trade the afternoon session as normal. So, gap was filled on the NAS. Yep. So gap fill down on the NAS. Actually screamed through the gap fill on the NAS. That's just hit ADR and is coming off of ADR now. We've come off of ADR as well on the S&P. So it may be that we get enough selling start on the NAS now to bring the S&P down. The Dow's still not done it, has it? Yeah, so the Dow's still absolutely miles away. As is the DAX, obviously. So we've still got plenty of room on the DAX and the Dow. And obviously we've hit it on that one. And we're almost done on the S&P. So it's pretty close. But as I say, this area of accumulation here from Friday, this is really anywhere up here we could see rejection starting. So with that in mind, obviously, potentially this is where we're going to start to see the bearish price action kicking in across the board on all of these. So looking at them on the dailies and the 4 hourlies, gap fill done on the daily. We've got our couple of bull bar pullback in, so tapping back up into the 20, looking for a drop. So potentially this is where we're going to see a new downside starting. So I think today, look at where the high is yesterday on the S&P. If you wanted to, the best play I think on this at the moment is to try and scale in to a short. So if you're getting short here, and put your stop somewhere above 125 ADR, you could scale into additional positions, assuming we're going to double top with Friday, and then potentially today we could go green to red. You never know. Anything can happen at the moment, so we'll see. But I'll be looking for short positions now, because this is, if you stick an RSI on this, you'll probably find this is quite tired now. That's the wrong RSI. We're on a low time frame on the 21. Yeah, it's not there yet, is it, actually? So, yeah, a little bit more, maybe. But I'd start thinking about shorting. Sorry, I thought I was on the M15 then. I'm not. Yes, it's not even there on M15 yet, actually. So, yeah, see what happens this afternoon. I've banked a fair bit on this. I'm not sure I'm going to attempt to short on it. But if I was going to be shorting on this, I'll be looking for price action. So looking for bearish price action, and pending orders underneath the lows. So again, if you got this, obviously sell stop under the last candle, hit that, and that will put a sell stop immediately under that last candle. Obviously you can put the, let's cancel that one off. So yeah, high of that candle. So sell stop under the last candle, close, stop loss just above the high of the last candle. So if this does start to suddenly collapse, we'll probably find we will get a quite fast bearish engulfing move go in, and then the collapse will start from there. So climbing up the stairs, falling down the elevator shaft style move. So you want to make sure that you're ready to get taken in on that move when it starts, and then capitalize on it when it comes down. So you can obviously use those pending orders and then just cancel those off, put new pending orders in. That's how I would be playing it. But I don't think I'm going to bother trading it this afternoon, because I've made fairly decent profit this afternoon. I don't want to give it back. And with the current market conditions, anything can happen. So just be a little bit careful. All right. So have a good evening, afternoon, wherever you are, whatever you're doing. I'll be back tomorrow morning, as I say. Yeah, 8:30, I think. tomorrow morning. I'll put a message in the Telegram group. In fact, it might be an argument for me starting it early tomorrow morning, getting the analysis done early in preparation for the builders turning up potentially at 8:30. Let me have a think. I'll stick a message in the Telegram group, but obviously hit the notification bell if you're subscribed, and you'll get notified when I go live anyway. It'll be sometime tomorrow morning. All right. Have a good day. Be aware, obviously, any positions you've got on, be aware. Actually, I'm going to have a quick look at the EA if you want to hang around before I go. Tomorrow morning, we've got Australian rates, so be prepared for that move overnight in the Asian session. So anything you've got Australian and New Zealand dollar, you need to be aware of those because you're probably going to get some impact on those while you are asleep. If you're in the UK, obviously if you're around and awake in the Asian session, you'll be able to see what happens with those. Let me just see where I've got to with the EA. Oh my God, 3% of drawdown on this one. So we're not having a good day then on the pound. Not really gone anywhere, have I? Break even on that one. A little bit of drawdown on those two. So looking for some pound strength basically. The minute we've not got a lot of it. We are double topping, so I'm going to keep an eye on these. I'm going to look at these towards the end of New York. Hopefully we'll get an end of day sell off on these, and I can get them back to a position where I can just close some of this out. I don't really want to be holding things in line with cop bias because I don't believe there is one when we're in this war at the moment. So I'll keep an eye on those. I'll let you know what I'm going to do on those. I may well still be holding them tomorrow morning. We never know. There's your gap fill. There's my targets, pretty much hit. So you pretty much, I would say, near as damn it done on that one. So it has reached the gap fill. So be prepared for some potentially fast bearish price action. We may well just scream through it like the NAS has. But the NAS is looking a bit tired now. We've had 2 pause candles. We're just trying new highs. So if this high fails, this candle as well, got another 8 minutes on this one. If this fails as well and we end with a nice wick and a bearish style candle, I would say we're probably hitting our exhaustion point for the day. But we'll see. Okay, so have a good one. We'll see you back here tomorrow morning at some point. Come in the Telegram group if you're not already in there, and you'll know when I'm on, or hit the notification bell, and I'll be back tomorrow morning. Okay, have a good afternoon.